Hello everyone, this is Dan Gramza and welcome to dangramza.com Market Studies for Monday, October 21st. Well, let's see how we finished up on Friday. We're looking at the Dow. If you haven't looked at these before, this is a daily chart. The concept is a swing trade, which means it lasts one day to maybe a couple weeks. That would be typical. Solid lines means at the buy or sell level. Green's buy, red sell. If it's a dash line, it's something that happened earlier in the week. Now here, just a couple days ago, in the Dow, it traded below its sell level. The dollar value of that change is $3,265 a contract. And the next buy level has been moved below these lows, and see if we can get some follow through. And so far for the last couple days we have, but I want to point out to you, if we were a seller here, the market really did not move much at all in that direction. So a sell here failed in that. So risk management is always important in any trade that you do. Here's the Russell holding its own. It's what I call neutral zone trade. In the euro, the dollar difference between the buy and sell level in that market is $3,762.50. Follow through to the upside is expected. In the Swissy, we don't see the same level of activity, and a sideways move there would be expected. But in Mr. Yen, we're looking for a rally in that market. Aussie dollar difference here, sell to buy level, just to give you a reference, is $750 a contract. But it's a very weak rally, so not a sign of continuation. In the British pound on Friday, it traded above its buy level. Dollar difference from the sell level, $1,931.25. So what do we look for here? It's kind of a sideways move. We're seeing a mixed bag against the dollar. Over in the Canadian dollar, here we did trade above its buy level, and the dollar difference here from the sell to the buy level is $1,350 a contract. So this is a market also kind of a mixed bag, some selling, but I don't look for a dramatic move to the downside. Bitcoin wants to go higher, but can it get the job done? From the sell level here in the 10-year notes down to that lower buy level, that's $2,375 a contract. This implies that yields will go down on Monday, and this would drive prices higher, would be the expectation. You know, we're seeing that in bonds too. It's slowing down, possible transition. So Monday and Tuesday will be very important for that market. The sell to buy level there in bonds, $4,062.50. Let's move on and take a look at gold. Gold, the momentum is still in favor for that market. Silver's in the same boat. The difference between the sell and buy level in copper is $1,000 a contract. Looking for a sideways move there. Crude continues lower. May get a bounce there. Be sensitive to that. Nat gas also weaker. And if we look at soybeans, traded above its buy level. Dollar difference in that market. Again, just to provide you with a reference of what that looks like, that is $2,500 a contract. So a big rally? I don't think so. Fundamentally, globally, it doesn't look really bullish for that market. In the corn market, we also see some interesting action here fundamentally from a global point of view. And the dollar difference here is $200 a contract. Look for a sideways move here. Now wheat, a dollar difference here in that market is $300 a contract. The difference here between the sell down to that lower buy level is $150 a contract. And what are we looking for here? Well, fundamentally, weather looks good. Global supplies look good. Russia now is getting ready to export some of its wheat. So the global situation doesn't look too bad. Look for a down day, but not a big day down on Monday. Well, those are my thoughts for today. Thank you for sharing your time with me. Look forward to being with you again. And as always, take care.